Hey everybody, Courtney Smith here with our December 26th edition of Wall Street Winners, and happy holidays to everybody. And I'm putting out a series of videos over on YouTube. Search for Courtney Smith Trading and you'll find me there, all about the outlook for the coming year. So check it out. I think you're going to enjoy it. All right, let's get right into it here. So the market sold off as I told you it would last week. And I think we've got a little bit more on the downside. But I think here in the S&P, we will not break the low that we made in October. We're going to get everybody all excited that we're going to break the low. We're going to freak everybody out, and then we're not going to break that low. Now, right now, as I say, we're going to look for a little bit more weakness in this market. Look at the purple predictor. As I pointed out to you last time, it had broken this low and is making new lows, even though the price is holding up. So that is a negative thing. On-balance volume, which is the purple predictor, is saying that the smart money is selling these rallies. I don't like that. But I'm going to disagree with them for now. Over here, same sort of situation. We can see here that the little red line, that's the selling pressure, is a little bit higher than the buying pressure here in the Dow. But the Dow is still the one that's holding up the best, showing that people want companies that actually have earnings, that actually have a balance sheet. And they're not just a COVID play like a Zoom was. They're not a meme stock like GameStop. They're not something that's just going to take years to make money. High tech is still the weak link in the whole chain. Let's take a look. Look at this. NASDAQ is basically just barely broke through these lows and is challenging the October lows. Purple predictor, though, look at this. It made a higher low when prices made a lower low. Now, it's just a little micro pattern here, but this shows that the NASDAQ is actually starting to show a little bit more strength than the other two indexes. And I think that that's probably going to continue. Usually, January, the NASDAQ outperforms the Dow and the S&P. Look at this. We got right up to our buy signal and our seasonality indicator, and then it fell off. And we never did get the seasonal signal. But I want to show you something on this chart as well. This chart is IWM, and this is an ETF that mimics the Russell 2000. So in other words, it's small cap stocks. I told you that really in December, middle of December, we start to see the small caps outperform. So you can see they're not anywhere near the lows here. Dow is still stronger than the IWM, but look at the purple predictor. Completely different than the other three indexes, showing that the smart money's buying small caps. At the same time, they're selling large caps. Now look down here. Utilities are typically sideways during this period of time. We're way past the seasonal bullish period. And look at what's happening here. Utes have held up very well, but the purple predictor shows that the smart money is selling the Utes. They're breaking down a little bit, but the smart money's telling us we're going to see the utilities collapse even more. But seasonality is still bullish. So far this year, the red line has been the best one. It says that we should turn around and rally until the end of the year. No reason not to expect that. Asset allocation, pretty stable. They're getting out of both stocks and bonds. They're going into cash. They're going to the safest investment that there is, which is cash. You got that? So they don't want to take a lot of risk. See that? The risk indicator shows that the market doesn't want to take risk. That's one reason why the Dow is outperforming, because those stocks are far less risky. They actually have real balance sheets and real profits. So the markets, you can see we've been going since June on this low risk method. And right now they're saying we don't want to take risk at all. This is bearish for the NASDAQ. Now, I showed you that little mini pattern, and that's going to be good for a week or two, but this shows the overall tendency in the market is they're running scared. And they're not only running scared of the stock market, they're running scared of the bond market, and they're putting their money in $20 bills and stuffing it inside their mattress. Inside the mattress, not under, inside the mattress. Global shares holding up very, very well. Why? Because the ECB, the European Central Bank, is is probably going to be less tight, I should say, than the Fed. Over here, inverted yield curve perked up a little bit. This is actually would be bullish for the stock market. Bonds, this is what I'm saying. See, they don't even want bonds anymore. They've been buying bonds now for 2 months, and then they said, no, that's it. No more bonds. We don't want them. They're too risky too. So, purple predictor, a little bit bullish. So I don't think we're going to see the same type of a dip in the bond market that we've seen over in the stock market. And if we go over to our key indicators, this shows that yields are going back up again. Up again. This indicator, which is the CRB, it's stable. But gold's going up, 10-year treasuries are going up. And remember, if interest rates are going up, that means bonds are going down. So look for bonds to continue lower. The dollar slipping lower, but I think we're going to make a low here. Notice that the momentum was quite sharp during here, less sharp here, less sharp here, and we've now gone sideways for almost 2 weeks. So I think the momentum on the downside is running out of gas, and the ECB is pretty much caught up as much as they want. The market's going to start to say, oh, no, the dollar, it's okay. If the dollar's okay, well, wait a minute. See this? Strong upside momentum. Hardly any momentum in the gold market. So look for gold to stabilize here, maybe even start to go down again. Maybe just a dip like this one right here. Not a major bear market like earlier in the year, but a dip in the market. And one reason right here. We do have 2 bullish indicators and 1 neutral indicator. But fully paid up members get an additional indicator, and it's quite bearish. Of course, you should subscribe so you can see what the fully paid up members are seeing. So the situation here is reasonably bullish, but if we add in the extra indicator, it's not bullish at all. Crude oil showing us a little bit of signs of strength here. Not on demand, but supply is contracting a little bit. And the purple predictor is starting to show some signs of strength. I don't want to trade it. I want to be long some raw material stocks. And a lot of energy stocks are breaking out to new highs. So that's one place to be. But look at this. The chart starts in the upper left and it ends in the lower right. By definition, that's bearish. Bitcoin, we're still stair-stepping, but notice the purple predictor is starting to degrade. That means we're just about ready to take another stair step down to probably about 13,000 would be my next downside objective. All right, freebies, sign up and become one of the cool kids.
Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E-table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody, we'll see you later.